Bitcoin and Tether's dominance is growing. Investors seek safe havens. Bitcoin, the largest cryptocurrency by market capitalization, and Tether, the most popular stablecoin, have increased their share in the overall cryptocurrency market. Measured as a percentage of the total market capitalization, Bitcoin's dominance rose to nearly 50% in the early morning on Saturday. Around the same time, USDT dominance also increased to over 8.2%. Bitcoin's dominance is rising. Altcoin market crash. As is often the case with the rise of Bitcoin's dominance, Saturday's increases coincided with a significant crash in the altcoin market. The reasons for the increase in Bitcoin's dominance are twofold. On one hand, BTC price remained more resilient to declines compared to many altcoins. With tokens like Solana and Polygon experiencing over a 20% drop overnight, their market capitalization plummeted. As a result, Bitcoin's relative share of the total cryptocurrency market capitalization increased. At the same time, Bitcoin's relatively stable price provides investors with a certain degree of protection, leading to a greater outflow of funds from altcoin markets into BTC. Investors are seeking a safe haven to protect themselves from falling prices. Bitcoin's dominance has been steadily increasing since November. Furthermore, it sharply rose during the March banking crisis in the US. After Saturday's increase, BTCD is at its highest level since 2021. TUSD depeg strengthens Tether. Bitcoin's high liquidity makes it an attractive way for cryptocurrency traders to exit altcoin markets. However, stablecoins also offer an alternative risk avoidance strategy. As the most popular dollar-backed stablecoin, Tether, USDT, provides an easy way to avoid cryptocurrency market volatility without fully transitioning into fiat currencies. Another factor that may have contributed to the increase in USDT dominance is concerning price deviations, depeg, in another dollar-denominated stablecoin, TrueUSD, TUSD. On Saturday morning, this stablecoin temporarily lost value against the dollar, dropping to $0.9951. Our TUSD minting and redemption services remain unaffected and will continue to operate as usual. We want to assure you that our partnerships with other banking institutions remain intact, enabling smooth transactions. Countdown to the introduction of regulated cryptocurrency zone in the EU begins. The countdown to the establishment of a regulated cryptocurrency zone in the EU has begun. The publication of the EU's cryptocurrency legislation, known as MiCA, in the official journal marks the start of the formal process. The final licensing requirements, rules for stablecoins, and anti-money laundering provisions are expected to come into effect by the end of 2024. Countdown initiated. On June 9, the European Union's regulations on crypto asset markets, MiCA, were published in the official journal of the European Union. This initiates the countdown for the law to become effective on December 30, 2024. The law was signed and deemed enforceable on May 31, following its presentation in 2020. The aim is to create consistent regulatory frameworks for crypto assets across all EU member states. Despite officially coming into effect in 20 days, the regulations will only be fully enforceable from December 30, 2024. However, some specific parts of the regulations will come into effect earlier, on June 30, 2024. Uniform conditions. The regulations have received praise from both cryptocurrency service providers and cryptocurrency proponents. This is due to the fact that the legal framework provides a harmonized market environment throughout Europe in terms of regulatory requirements and operational procedures. Key elements of the MiCA regulations include registration and authorization requirements for cryptocurrency issuers, exchanges, and wallet providers. Under the new regulations, stablecoin issuers must meet specific security and risk mitigation requirements. Additionally, cryptocurrency custody service providers must implement sufficient security and protection measures to address potential shortcomings in cybersecurity and operational security. The regulations also provide frameworks to prevent market manipulation, abuse of confidential information, and manipulation in the cryptocurrency sector. Meanwhile, cryptocurrency markets and operators in the United States are facing increasing pressure. Especially now that the Securities and Exchange Commission, SEC, has taken legal action against Binance and Coinbase, the two largest cryptocurrency exchanges in the world. Both exchanges are accused of acting as unregistered brokers and offering unregistered securities. Binance CEO Changpeng Zhao has warned employees to consider other career options if they are not satisfied with the company. This warning came after the leak of internal conversations between a former compliance officer at Binance, known as Sam Lim, and a former business development executive, known as Alvin. The leak occurred during an ongoing lawsuit by the Securities and Exchange Commission, SEC, against the exchange. According to the Chinese news outlet O Daily, Chongpeng Zhao wrote a letter to employees in reference to a tweet by Adam Cochran, a collaborator of Yuan Finance. Zhao believed that using internal chats as evidence by the SEC was absurd. In the letter, he warned employees that everything they say may one day end up in court or on the internet. At the end of the letter, Zhao urged employees not to waste their energy working at Binance if they were not satisfied with the conditions. He encouraged them to talk to their superiors and seriously consider other career options. In the leaked Binance internal chats, Sam Lim and Alvin displayed a disregard for compliance within the company. The leaked conversations suggested that Lim claimed there was nothing to prove that Binance was compliant. Chongpeng Zhao believes that the leak of the internal chats has caused significant damage to the company. As a result of the SEC lawsuit and regulatory difficulties in the United States, Binance US has decided to suspend all USD deposits and withdrawals starting from June 13. Despite the SEC's ongoing attacks on Coinbase and Binance US, Senator Cynthia Lummis continues her efforts to regulate the cryptocurrency market. Senator Cynthia Lummis fights for the industry. In collaboration with Senator Kirsten Gillibrand, Senator Lummis has prepared a bipartisan bill aimed at regulating the market for digital assets. She also boasted about another success.
We managed to prevent the inclusion of a 30% tax on mining digital assets in the debt ceiling agreement, but the fight is far from over. I am working on regulatory frameworks that will enable individuals and businesses to own and trade digital assets in America,
stated Senator Cynthia Lummis. The proposed bill by the two senators aims to achieve several objectives, including providing a clear definition of cryptocurrencies and specifying what tokens constitute securities and what do not. By establishing precise asset classifications, the legislation also aims to create stable legal frameworks for companies and investors operating in the industry. These efforts not only address the regulatory uncertainty that is currently a problem in the U.S. market but also have the potential to foster new technologies and innovations. Additionally, the proposed regulations aim to introduce a universal ban on the issuance of algorithmic stablecoins, although further analysis is needed to determine the authorized entities for issuing stable cryptocurrencies and the requirements related to maintaining reserves in USD. Strange problem in the U.S. The United States has long been grappling with one peculiar problem. Why has the country's authorities been unable to definitively regulate the cryptocurrency market? The urgent need for such regulations was already emphasized 4 years ago during the previous presidential campaign by Andrew Yang. He claimed that the U.S. had a patchwork approach to digital assets, with each state treating them differently. He warned that this could result in the country losing its strong position in the field of new technologies. In hindsight, it is evident that he was correct, as there is growing evidence that Europe and Asia could benefit from the legal chaos currently seen in the United States. On June 9, the blockchain Whale Alert Tracker reported a significant transaction involving the transfer of 4 trillion Shiba Inu tokens to the Binance exchange. The value of these SHIB tokens amounted to $31.7 million, and the transaction fee was only $1.78 before the price of Shiba Inu dropped. This transaction elicited various reactions, but market participants noted that it increased the circulating supply of Shiba Inu by 1%, reaching 578.9 trillion tokens. The number of locked tokens also decreased, bringing the total locked SHIB tokens to 10.41 trillion, according to Shibburn data. As a result of this transaction, selling pressure on SHIB increased, leading to an 18.3% drop in its value over the past 24 hours, down to $0.00000648. However, this price decline reflects the overall cryptocurrency market trend during this period, considering recent regulatory troubles faced by major cryptocurrency exchanges. Data from Into the Block also shows that the price drop contributed to an increase in the percentage of investors holding SHIB at a loss, reaching 89%. According to blockchain analytics firm data, the number of SHIB millionaires also decreased to 1. The transaction volume on the Shiba Inu Shibarium platform approached 20 million. The Shiba Inu Shibarium PuppyNet test network recorded a growth in total transaction volume, reaching nearly 20 million. It averaged 500,000 transactions per day over the past week. According to PuppyScan data, PuppyNet processed 19.58 million transactions and 1.2 million blocks at the time of publication. The average block time is 9.8 seconds, and the number of network wallet addresses exceeded 16.7 million. The increased network activity caused the burn rate, according to ShibBurn, to increase by over 4,000% to 227.44 million tokens in the last 24 hours. These numbers suggest that the Shiba Inu network is being heavily utilized and embraced by the SHIB community. Shibarium is a Layer 2 solution built on Ethereum for the Shiba Inu ecosystem. While the mainnet is not yet ready, the team publicly released their PuppyNet test network on March 11.